Morning.
All right. Yeah, good morning. This is Friday, August or September 18th, and we're going to be going until about 9:30 today. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss or some or all of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room is for educational purposes only. No financial advice or recommendations will be provided, and any trades taken during this live session is not a recommendation, nor is it a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. Now we got that out of the way. Let's go to the charts, and we have a couple of alerts today, and the last one we had was a New Zealand USD at 7:30. I think that one may already be out of the chute. We'll take a look at it. We had an Aussie US at 7:15, and we had a US CAD at 6 o'clock, which I was in, out, and it's still kind of playing out, but it's pretty much right at the end of its move. If you got into that, you may want to be thinking about getting out of it. Let's see, news today. Let's check our news calendar. And Friday, there is no red folder events that I'm seeing here. So that news should not be a big factor today. And let's go with the latest alert that we had, which was the New Zealand at 7:30. That would kind of play. Let's just check the Aussie while we're here. And well, let's see, New Zealand. Here's the alert on the New Zealand right here. Let me change the color of this. And this is Open Mic Friday, and so anybody has a microphone, if you turn it on and I can see your mic, I will allow you to talk and unmute you, and that way we can just be a little bit more casual today, and we'll do it that way. If you have any questions, you can either type them in the chat, or you can just open your mic and ask the question. So.
Al, we're still on your on the Hawkeye screen.
Oh, thank you. That's why I have you here, Christine.
Sure.
Okay, here we go. All right, so here we are. We are on the New Zealand USD. We had an alert at 7:30, I believe it was. 7:30, ascending wedge on New Zealand. So we're going to come over to New Zealand. 7:30. Here's our 7:30 mark. I'm looking back at today's activity, and actually here was a low today. Here's the high today. And we had the alert right in this area. What I'm going to do is, let's see, well, it's going through the 62 moving average on the 15-minute chart. It bounced right down into that, and we're seeing what's going to happen with this. As far as the wedge goes, I kind of like this little pivot right here. I'm trying to see where I'm trying to find the pivot low. I'm trying to find where the trend is. And you can see this is a nice little trend up from yesterday's low to overnight high. And I'm just trying to see where the wicks are of this. Like here's a nice strong move, strong move up, strong move down, based right in here, and then it's gradually moved its way back up. So I'm going to use this pivot low here for this pivot area here for a reference right in the bottom of this big blue candle. This was the origin of where this little move right here came from. So I like looking at these, trying to find these big extended range candles, strong move up, strong move back down, all within 15 minutes of each other. There was a lot of something going on in that area. So we're going to use that as a reference I'm going to put that as the bottom of where this thing may fall into place. Until then, we're just going to have to, so right now it broke the 62 on the 15. We had this is basically where the alert was. So I drew the secondary wedge. This is this is the wedge that probably generated the alert right here, but we have to look about where our targets are going to be. So I'm going to be looking at a target range of, I want to see a close. If I have enough room from here to take a trade, if we get a reason to do so, we may try and do that. Price wise, it's at 67.71 to 67.61. So that's basically, there's 10 pips from where this candle is forming right now. We have about 10 pips till we get down to here. So that would be tight for our 5 to 7 pip target, but it's not undoable. We do have, here's where the alert, it came down, really broke this pivot area. This one still held. So from this, I'm going to be looking at this area right here for a area of interest. And it would have, if it comes down here, this would be more of a, I consider this to be almost more of a trap area, because this area this has been rejected a little bit, but we do have a close below the 62. These moving averages haven't all consolidated. If it's going to go short, I want to see the 62 on the 15 be above the yellow 13 moving average and above the green. So we should have a green, yellow, a orange, yellow, green for the short side. Now, if this is going to be going to the upside, to the long side, all of our moving average will be in order with, once this green one turns back over above this 62. By the time it gets to the end of the wedge, and if it breaks up that way, these may be in the right order. Right now, I don't see this as being a really good trade because there's too much conflict going on. As far as, I don't want to be taking a short with the stronger moving average being below everything. And then we can go and see what it looks like on the higher time frame on the 5 minute. 5 minute, it's in the right order, but we're bouncing off. Hey, good morning, Matt.
Good morning.
But we're bouncing off the 62 on the 15. So right now it's just sort of consolidating. These are in the proper order to go short. If it does take a short, it's going to be, I'm looking this, I'm not convinced it's not going to bounce off of this area right here. So it is a possibility that you can maybe take it short, but it's not it wouldn't be my favorite trade. Let's just say that.
Yeah, it wouldn't be very high probability, just from the whole trend that's been going on. You'd be going against the trend pretty strongly if you're taking a short here, just from the higher time frames. It looks like a better opportunity to look for a nice bounce and maybe take it long.
Oh yeah, I would agree with that. So we actually right now I'd be looking for it to maybe come down in here, see these moving averages hook, and maybe look at this. I would almost consider this to be almost like a little bit of a trap zone right in here, where it came down, broke a little bit, come back down. I think it's going to have a hard time getting through the bottom of this pivot area, which is where we drew the main wedge. I think it's going to have a little bit of a difficult time getting through that. If it gets through that, then we could be looking at this area right in here for a target. So we'll just have to see. It's not like I said. This would not be one of my favorite trades. It's a doable thing, but if it does break here, could be looking to coming down to where this yellow line is right now. The strength of everything is not. Let's see where we at here. Our RCS tool says the U.S. is strong to the downside. That's strong by 6, so that's by 5. That's good. It is showing strength to the downside with the RCS tool. The question is, how far will it go with all these? I would be looking, if I did take it short, I would want to see this moving average be up here to hook and still give us an indication that it was going to break. That right now looks like this thing could come down, give us our hook right in this zone, and then give us our little head fake. That's why I'm kind of looking at this area here being somewhat of a trap.
Yeah, because that would be a 38.2 retracement of that entire move up from the origination of that move. If it comes down to 67, 65, that's a 38.2 retracement. So you're looking
65, that'd be right about in this area, right about in the middle of our trap area.
Yeah. So that's you're looking to get your butt handed to you. That's a place you would not want to be taking a short trade at.
So if we can come into the trap area, which it looks like it's coming into, and
Yeah.
we find an area, if we can get the hook, we may want to try taking it long once it comes out of that. If we can get all the moving average, I wouldn't want to take along until all the moving averages on the 1 minute are telling us to take along, which means I'd have to have a white, yellow, green in that order with the price above everything. So I would want to see these moving averages cross over. I I said, right now I'm looking at this could be an area where I may have a hard time. It may break through this orange area, the orange line, which is our basically come over here to where the pivot, where the strong move up that we talked about earlier. If it can break through that, it could come all the way down to the yellow. And let's see, and from that, so if we do get if it does get the break and everything else is still showing weakness, we may, it would be, I would say it would be a 50-50 trade whether or not what it's going to do. And I like a little bit better odds than that. Question would be is if you would have the range to here. You have 13 pips. So, I mean, I just not sure what the strength of it is right now because all the 15-minute RSIs are coming down into the 80 or the 11 area. So just want to be careful with this one right here.
Yeah, there's a couple. I can give you a couple targets like where it could potentially reverse. If we want to shoot that at the
Okay.
wind and see what sticks, but got something at 67.71.
Hang on a second. Let me get this in there. 67.71.
71. Yeah, so that's a pretty strong spot, and then it sliced through it. Interesting.
You're talking about to go long at that
Yeah.
point? Because already below that.
No, absolutely. I'm just saying that's a strong point where there's a lot of activity.
Okay.
Where in the past you can see where it came and it tested it and then it finally broke out. Just a couple candles to the left. But anyway, so if you're looking at another point of interest would be 67.64 is like kind of your
right about where we are, right where it just got a bounce right here.
Yeah. So that's a really strong spot. And then the next one, you're looking at 67.40.
That's all the way down here, which is right down below where this area is here.
Yeah, and that's about a 61.8 retracement of that original move. Now, do I think it's going to go that far? Don't think so, but we'll see what happens. I think this is this could be the pretty nice move up. So, but we've all been wrong at times. It just seems like it's a nice setup.
Yes, I do like that. I mean, I do think right now you can see where it's stalling inside of here. And
Yeah.
so if we had the break of this trend line, and right now, if we get the break over here, I mean, this is still, I mean, this is the next area where we're looking to, you come over here, you can see that's the bottom of this is the origin of this last little push up. This is after yesterday's close. And it opened up, came down, and it took off. So this is the area where the close of yesterday, or this is probably today's close, I believe. So this is the area that we'd be looking at for a target if it were to break through here. And that's this area right in here. I mean, you can possibly get your 7 pips from this secondary wedge, but so this is the primary wedge right here. This is where when we had the alert, this is the area that I'd like to see it break through. But this is the area up here where the alert came in, and you can see that there was a nice little move up before. So it broke here already. It broke here pretty quickly after this area, this point right in here. You get that. And you have had to be pretty much right on it when the alert came through. But here was the alert, and here is the last pivot and it broke. So it's already broken that area. Now it's coming down to retest this. So I would say once we can, and then, so if it comes, if we get a retracement back to the upper side of the wedge, then we have some room to the upside. And so we're looking, again, the biggest thing is, do you have enough room to take the trade to make it profitable for you? And everybody's criteria, how much do you need or how much do you want? Because I said, I want to see at least, I like to see at least 12 pips to be able to get my 7 out of it, or else you're just really playing with fire as far as your risk reward ratio. But if it does break the D area, which is right here where the wedge broke, and that's right where my D is, and that's just a projection. Actually, that was just where we have a higher trend line coming in here. And I just, when I drew this little secondary wedge, I just put the D right on top of the trend line.
All right, so we're slicing through it. So let's see what happens.
And so we're on 15 minutes. Let's go to our lower time frame. Let's see, how is our RCS tool right now? Still strong, still strong, still strong. Here's the hook.
Yeah. See, I didn't like it short, guys. I didn't like it short.
Now that's not to say it's not going to come up here and retest the bottom and then break on down. That's not saying it's not going to do that either.
No, it really could. It's just the higher probability trade is going long. Just because of Fibonacci and the way that that price is moving at the time.
And one thing I do like, Matt, about the short is we got all of our 5-minute moving averages are all in the right order. And we did get the break of the 62 over here on the 15. So I would say this, if it comes up here and tests the wedge in the upper part of where this red trap zone is, if it can come up and break from there, then I would say we have a good shot of it. As this moving average comes up and if it hooks, these are still hanging down low. This could be a nice little retracement, and we might be able to get our 7 pips out of this.
Well, let's find out.
Like I say, if it breaks this, we're looking, this is the next target zone. And if we go from that at 67, 64 to 54, there's our 10 pips. We can get our 7 pips out of that if we get a nice little break on there. I like the fact that this is spread out quite a bit different. We have a nice little range between the 62 and the 13. This is coming up, and if we can get a hook back down, that's a hook. You can take a shot at this and just have a really tight stop up here at 71, 67, 71. That's only a 4 pip stop.
4 pip stop's good. You're not going to get much closer than that.
Yeah. So I'm going to go and I'm going to take a shot at this one. So I'm going to go with target there.
Let's see what's going to happen here.
Move a risk is going to be, we're going to say 7 pips. 70. And we're going to sell. And this is the New Zealand USD. New Zealand's actually been playing pretty nice here lately.
Yeah. Let's see what happens here.
So I'm going to keep a fairly tight stop on this. I got a, right now, there's mine stops at 9 right now. I would say that's more than enough right for this moment. Right now, as long as it respects this trend line, I'm still good. And actually, I kind of like having this thing up around as this plays out to the right-hand side of the chart. This 62 moving average will keep on coming down a little bit, so that'll give us some.
Excuse me.
A little area to. That was a little bit of a buffer. Right now, I want to keep my stop above that 62 because if this thing says a little bit more of that's 15 pip stop. I don't think we're going to need that much. We'll be out. Well, I just want to keep out of harm's way because if it turns around, I'll be out before it gets up there.
Oh, I know what you mean. Okay. And where's your stop at? Are you saying 67 what?
Well, right now I've got 67. Basically, I can keep it right above this candle. If this thing plays out, there's a 12 pip stop. So if I keeps it right above, I'm going to see it stay below this candle. But if it comes up and this red candle right here is the area where the last little hookup is. So if this keeps on going
75.
with a drop base drop, if it bases in here and comes up to retest this area, it should still be retesting this 62. If it comes out and stops me out, stops me out. If it gives me another reason to get back in, I can switch directions. But I don't want to let it go to where I say, okay, well, I don't want to take on the mindset that I want to keep it within 7 pips. If something's going wrong, it's going to go wrong beyond this zone right up in here. So as long as we have this nice move down, we have some basing coming in here, it's basing inside this range right here. So, and right now everything's still saying it's a short. I don't want to be taking it long right now with the US dollar being 5 points stronger than the New Zealand. So we're going to say right now this is the zone where we need to make sure it's got to break out of this zone. And it's getting it's going sideways inside this range. It's a relatively narrow range, 61 to 65. This is a 4 pip range.
4 pips, yeah, that's what I was about to say.
Al, can you just check with the RCSs are on all 3 time frames?
We can.
Please. Thank you.
We have the the RCSs. We have a 6-1, 6-1, 6-1, 15, 5, and 1.
Thank
So
you.
the RCSs are strong, all strong to the downside. I do not want to take it long with that big of a spread on the 15-minute. And that's going to tell me, that gives me a fair amount of confidence. Absolutely not certainty, but it gives me confidence that this thing's going to break through the bottom. Our moving averages on our 5 and our 1 are all in the right order. Nice little spread between the 62 and the 13. The 5 came up on the 1 minute, came up, could not break through the 13, and it hooked back down again. So there's a little bit of a, if it breaks to the top of this zone up here where I drew this trap area, if it breaks to the top of that and closes above the yellow wedge, I'll probably get out of this trade. But right now I'm looking for the breakdown below this area. And usually when you get a strong basing area below a major support or resistance, either basing below a resistance or basing above a support, a lot of times you get this basing area, you get that drop base and then you get that drop down into our other range here.
Yeah, it looks like a nice continuation. So it looks like it didn't turn around at the 38.2, which means that it could keep on going down.
If we use our Fibonacci tool like we do sometimes, where we have a top range, low, high, low. Here's where the basing is. If the basing can stay within that 38% retracement, then this would be the target down here, which is right about where this target zone is. I'm going to take profit. I might move that up a little bit higher so I can catch the spread. That would be a 7 pip profit right there. This would be the zone.
It's trying to come up, but it's failing every time. It hasn't made a higher high. So that's a good indicator.
So here's our 78 to 1 ratio range in here. I'm just going to keep it right there where it is. So I'm going to look at this being a target. And we'll take this off so we don't clutter our screen too much. And I'm going to note where my 15-minute close bars are. So it's 15-minute is going to be right in here. This would be a time reference. I like drawing these little vertical lines with a time reference so I know where my 15-minute close and where my 5-minute close are going to be. So right now, so what I'm going to do here is I'm going to draw another vertical line over here at the close of the, let's see, 14, at 8:14. That's the close. So this, between this bar and this bar, that's our 15-minute candle. You can see our 15-minute candle has been in a very tight range, and we're looking at, this is going to be the open of the next 15-minute candle. And so we see right now the range of this 15-minute candle range this is basically what it looks like right now.
It looks like it's spooling up.
And we'll see where it goes. We'll see if it can see if this 15-minute candle can break out of this bottom right here. So right now, this is the low of, this is the lowest low that it's just, now it's making new lows.
There we go. How low can we go? What about 67.55? That's where my take profit would be.
And that's right where I am right here.
Yeah.
67, the 55 number, 67.55, 68.55. That's right at the 50 mark. And so that's right in the middle of basically in the middle of a dime range, I guess you could say. But 55 to 45 is a zone that's worth always paying attention to. And that would be pretty much like right about, see, this is 55 there. If I can move this to 45. I'm just going to give you this mark here. So between the 55 to 45, so right in here is where 50 is, right where this little, so right here is 50. And that would be and so from a institutional trading standpoint, they don't trade with they look at the dollar, the 75 cents, or the 25, the 50. Those are that's pretty much what you call the quarters theory. And so, and usually 5 pips above or below those numbers, like 5 pips above the 50 would be 55 to 45. 5 pips above the 75 would be the 70 to 80 mark. And so you'll see that a lot of times you'll see those bounces off of those quarter numbers. I'm going to take this trap off because the trap's already been broken pretty much.
Yeah, it's almost more than a theory because it's they like round numbers.
I did like the idea with this being with the dollar being as strong. Now it's on the 1 minute, it's starting to lose a little bit of its steam. But if we look at the other 3 time frames,
it's a tiny pullback, Al.
Yeah.
Yeah.
We'll look at the 5-minute chart and we'll just blow that one up and keep that one in check here.
Well, we're in profit for a bit, so let's see what else we got here.
So we're looking for our 7 pips. Let me see where we got in. Well, this is our 7 pip target. I'm just going to put the target right at 7 pips. We'll see if we can get that filled.
Expected a little pullback here.
Here's
so
the new 15-minute candle just opened up. I'm going to move this thing over to 9 o'clock. And we know that 9 o'clock we can get a lot of action at the 9 o'clock candle close. That's a 1-hour candle close. And right now, everything's looking good so far. The New Zealand pairs have been pretty good lately. I've been liking the price action. Usually when we get a good alert on that, it's usually worth paying attention to New Zealand. The Aussie's been doing pretty well as well. Unlike our experience with the Swiss.
Yeah, the Swiss. Let's not talk about that one. I think I've taken 2-3 losses this week on it, so.
I think that's pretty much the open consensus, Matt.
Yeah,
Yeah.
we're looking at it. I'll trade it in demo, but I'm not until I can start trading it profitably in demo. I'm not going to trade it live until we get to a better feel for what it's doing.
Just acting a little bit weird.
You know, and like I said, sometimes what happens is these different pairs will take on different personalities and different price action based on whatever criteria they use for the bigger banks are using from an international monetary standpoint. And so when things just don't work the way we expect them to, then we have two choices: either just stay away from it until it does, or try and find out where that little difference is to modify what we do and how we look at things to make it work. And and that's one reason sometimes you might see where we make a statement or we move a price point to a certain level, and we may tweak that a little bit from time to time. Well, that's just because we're just seeing the differences and we're trying to make those minor adjustments as we go along, not to change the whole philosophy of what we're doing, but being able to be somewhat flexible enough to where the markets are not a sure thing, and they're living and breathing just like we do, and you just have to be able to adjust. You know, some days we feel better than others. Some days we feel like really, well, I can go out and do all kinds of things. And other days, next day you're a little sore and you can't do anything. So, and the markets are the same way. You just have to be able to adjust a little bit to the variations as things go. And if you find out where something just is working and it stops working, just stop trading it and keep trading it in a demo until you can get your demo to be working where it starts fitting the criteria that which you're using to trade from.
Yeah, Janine had said, yep, my only losses have been on the Swiss.
Yeah, that's pretty much where I think that's been pretty much a common theme the last couple of weeks. So, like I said, just stay away from it. Keep practicing with it. I mean, I'm taking, even though I'm trading live, I'm taking demo trades all the time. I try and take demos on every one, whether I'm profitable for the week or not, because I'm not going to hurt anything. But all I'm doing, what it does, it helps to confirm the methodology as we press on with these things. Let's see how our 1 minute chart's doing here.
Ah, it's coming back against us. Look at that.
Yeah, yeah.
All right,
Again,
15
came down below our orange Fibonacci, or not the orange wedge. It came down, closed below it, but it didn't really. It's given it again. Maybe that trap was just a little bit lower, but we'll see. It's not done yet. We still have. There's a hook. We have our 1 minute hook. Our green moving average has not crossed over our yellow one yet, so that's a good sign. And you'll see that come up. A lot of times you'll see it come right on up, just tuck right underneath it, and then turn around. If you get it goes up and tucks and crosses and starts pointing upward, you may want to be getting out because it's probably heading up to pick up its buddy, the 62. And right now, this RSI did not get all the way up to the 89 level yet, so it still might have some room to the upside.
Yeah, you're right. I should have seen that before I entered.
Let's see where we are over here. But all the moving averages here are still below the 60-40 range, still below the 60-40 range. So there's still not a lot of, it hasn't gotten above the, if it gets into this range, it goes sideways, it's just going to be going sideways. But once it starts breaking out, then it's heading up here. This one broke out the bottom, still don't have the hook yet. So I'm still optimistic that this thing's still going to play out. Once we get on the 5 minute, once we get these coming down, hooking and crossing and start heading on up, then that's a sign to maybe be taking our little profit or small loss. This is still our target, so we're still looking for the target. Dollar is still strong on the 15. It came back a little bit. Now it's still a 6-point spread. So right now we're looking at the second strongest currency to the weakest currency. You don't want to take it long when the dollar is the strength. This is just a little pullback. Here's the hook. Now everything's pointing in the right direction. Whole moving average is all red on all 3 time frames. And we just wait. Keep monitoring the trade. It's either going to hit our target or it's going to, and you just play it as you see it. We don't have a crystal ball, but all we know is that how things move, and we just try to capitalize on our knowledge based on what we have. My crystal ball is usually pretty foggy.
Yeah.
But right now we have right now it's still respecting the 13 moving average on the 5-minute chart. That's my primary focus for trying to stay in a trend. If I get a little bit of a hook back on the 1 minute, I'll accept that to a point. But and the other thing I like about this, we're now starting to get the 1362 on the 15-minute to cross, and that's significant. We see it did break the bottom of this price range, and right now we still have the close on the. But let me go and mark this on the other charts. This is going to be the 62 on the 15-minute chart. We'll mark that right in here, which is where it is. If I can. It's all the way up here. 67.62, 67.62. So that's still good. So we're still below this one. Still below the bottom of the wedge that it broke. A little strong pullback. Not happy about that. The dollar is still strong. So right now we're just looking at this being a pullback.
It looks like we're on the right side of this. This could be like you love to say, a head fake, but we'll see.
I said it did break. It based. It broke out. Now the question is coming to retest the base with this basing area.
I'm not worried yet.
Right now I'm going to be looking at, I don't want to see it too much of a close above this level right here. Look at this as being somewhat of a visual stop.
Where's 67.70?
That's at the top of this nice move down here is coming up to retest this group. So I mean it's right there now. It's 67, 60, 67.
67.
Yeah, I don't want to see this candle close above this zone. But it still has this to get through. It has this to get through. This thing's still pointing down. It's still below the trend line. So right now I'm going to give it a little bit of breathing room. I like the fact it dropped at base. It's coming back up, back into the base where it was.
Excuse me, Al.
Yes.
Pedro had asked, he said, good morning. I'm curious how can we get this trading platform, TradingView, with all your bells and whistles?
Well, we are working on the bells and whistles. Right now, everything that you see on this chart, you can, other than the RCS tool, that's a proprietary thing. We're working on getting that. And I'm going to talk to, see if I can get a hold of Anthony today. But all the moving averages, the RSIs, That's available on TradingView just as as normal indicators that are available. The Fibonacci tool, that's a proprietary one as well. But everything else, all the moving averages and all the RSIs and the whole moving averages, that's all available on TradingView in the library. And I said we're working, and basically where we're working on right now, just so everybody knows, is we're working with Auvoria Prime, and as they change their pricing schedule, which is coming probably by the end of this month, we're hoping, they're going to be including the platform that you see here on my charts. That's going to be included in the price of the um, when you subscribe to AIRIS. The talk is that you'll be getting that as part of the subscription fee. And that's the deal we've been working on. And we just need to get we need to get TradingView to accept the indicators, and so we can put the scripts in. And there's a lot of technical things that happen to make these things happen from a programming standpoint, not only with the programmers, but also with TradingView to accept the scripts for their protection and everything else. So there's just a lot more things going on in the background that I was unaware of until, as we proceed through this, we find this out. But I know we've been saying this for a long time, and I apologize for that, but it is still in the works. But like the moving averages, you can just go into your indicator box and this moving average exponential, that's a free indicator. Just type in, I think if you just go with PC space moving average, maybe.
I don't know if any of the PC ones are gonna.
How about moving average? Just MOV.
Yeah, you can do simple. There's a lot of moving averages out there where you can modify the moving average to your liking, like multiple moving averages. There's a lot of strategies just around that by itself, but we use very specific ones. So 5, 13, 62, and the reasoning behind that is that we've there's
this very been tested.
Yeah, it's been tested and vetted.
But yeah, look at the moving average, the exponential moving average. Just put 3 of those on your chart. If you just have the free version of TradingView, I would just they only give you 3 indicators with the free version. So if you have the subscription to TradingView, you can get I'm not sure how many you get for what price. That's the reason why we bundle these. But 3 moving averages, put them on separately, just color code them the way we do on the different charts and make templates. And same way with the RSI, you can do that with the RSIs or basic RSIs, and the relative strength index, and put those 2 on, and you can get things to look pretty close to what I have. But we're just going to make it easier when we can get these things bundled up. It's giving us a little bit of a heat here. We still have the strength on our 15-minute to the dollar to the downside. So I'm not ready to get out of this trade yet. I know my stop is still way above the 62. It's above the trend line. It's above the 62 on the 1 minute. And my stop is still above all of that. Basically, I was looking at this area right here we had a drop, base drop. It's retesting the basing area right now.
Yeah, I probably won't let it go too deep, right?
No.
It's or too high. I mean, the retracement.
And if you look and see on this 1 minute chart, you can see where we had a nice move down. And it's actually forming its own another little wedge right in here. And that's oftentimes when you get these continuation patterns, it'll drop, it'll base, form a little wedge, and then it falls again. I like the spacing area here. I like where it broke out. Now it's just retesting the base. As long as the space can hold, that means there's still some sellers in here. Sellers took over, came back up, and oftentimes what happens is the bigger money comes in, brings everybody down, gets everybody in, comes back, takes their stops out because they have a really tight stop, and then they go and they run it down again.
Al, Janine had said that Trade Masters has a YouTube channel that explains how you set up the charts.
Oh, Trade Masters does?
Yes.
Oh, okay. The
Well,
Facebook.
now.
Janine
Well,
had
has a
some good
YouTube channel.
information there.
No, I was
Good, Janine.
Brian must have done that.
Yeah. That's news to me as well.
Yeah, it's news to me as well too. Brian,
Get out your popcorn and
yeah, take out the popcorn and watch the video. What the heck's going on with my phone here? I think my phone just got. I wonder if my phone just got hacked here.
a weather alert.
Well, no, it just started playing the music that I have no idea where it came from. That's weird.
Janine even put in the chat box the link.
Oh, there you go. Thank you, Janine.
You are awesome.
No, I said right now we had a drop, base, drop, retesting the base. Here's a wedge actually from low. And we're going to bring it down to, here's a little trend here. And we're going to see if this thing will hold. If we get the break. 62 is still holding. It's up in the base area. Actually, I'm going to move this over here to the peak of this one right here. There's a nice little slope down. We have a high, a low, a lower high. Now we need to see a breakthrough here. If it can break through this orange one area again. If it bounces off this area right here where this orange line is, which is basically the bottom of our major wedge that we had, if it can't break through that, we may want to just rethink this trade. Take this off. What's our time frame here? This is
we got a good entry on this one, so
yeah, we did. And right now we're only down 2 pips, which is basically just right at the spread.
Yeah, it's just slush. It means nothing.
Excuse me, gentlemen.
Yes.
Leslie had said that as an attendee, I can't see this link. It should be able to. It's right in the chat box.
No, it's a panelist. Hold on. Let me see. Here, I will share it with you. Let me see if I can get it to copy properly. My computer's really messed up. It opened up here. She shared it.
Your voice is sounding better today. You had some problems yesterday with it.
Yeah. I can't copy and paste it. Janine, if you can send it to all attendees, then it will work. It was actually just to the panelists.
I see what you're saying, Matt. I should have checked that. Now I know better.
Yeah, no, you're fine. You're fine. Yeah, yesterday, I don't know what was going on, but my computer was working like a potato.
If anybody would like to have their mics turned on, just raise your hand or something like that, and I'll turn your mics on for you.
Yeah, we could have some interaction while we're waiting for stuff to happen, and if anything happens, then we'll just cut you off.
Actually, what I'm going to do here, I'm going to, maybe this might help. I said we're calling this Open Mic Friday.
Let's do it.
Good morning.
There, Janine. Hi, Janine.
Yeah, I
Hey.
didn't have the option to unmute until you did that.
There you go. Yeah, I guess I had to click on everybody's microphone to get the microphone up. There we go. So now everybody, all you have to do is turn your mic on. You should be okay. That's not all talk at once, but some of it is easier than having to type chats in there and trying to understand what everybody's trying to convey.
Yeah, that's true.
Do we have any other alerts coming in at all? Nope, nothing since 7:30. Just double checking that.
You know, the end of the week like this is Fridays. You know, you get one last pump at the market. Everyone likes to get out. Friday, just a note, but Friday after 12 o'clock, don't try to make money. Just get out of the market. Because you don't want to be stuck in a trade over the weekend. You probably will be if you take a trade at after 12 or whatever, even after 11 or something. And then you got to pay whatever fees and swap, and then you're going to get gapped when the market opens again, and it's just not worth it.
Yeah, I agree with that. I don't like holding over the weekend.
No, and especially if you can just don't do it.
It's like this Canadian dollar is breaking to the upside. This Canadian dollar is looking rather strong. The dollar is strong to the Canadian and strong to the New Zealand. So as the U.S. CAD goes up, this one should be breaking down as well.
Well, let's see.
The CAD is actually New Zealand's 0, and on the 15-minute chart, the CAD is number 2, and we're at 0 so basically the CAD and the New Zealand are fighting for last place in weakness against the dollar. So as far as overall dollar strength, we're in the right direction on this trade. We're just waiting for it to materialize here. You just got a nice little pop up on the around this 9 o'clock in preparation of the 9 o'clock closing here, which is right here where this bar is.
Oh yeah, we're prepping for the 9 o'clock. We may get something special
So
here.
Here's 8-4. So basically, right now, this 15-minute candle closed or opened right here at the top, and right now it's got a little bit of pullback. It didn't make a lower low. So right now we have sort of like an inside candle right now on the 15-minute. We'll see what it's going to do. I'm just going to go and take this little thing off here. We'll just look at the price action.
You guys hear the little one from down here?
No, I'm not hearing them today.
Okay, he's
So
he's wailing. I think it's a diaper change.
Now we did get the green crossing over the yellow on this one. My stop zone is still over here on this red candle, which is pretty much the open of the 15-minute bar. Now, this is a price action between these two vertical lines. This is a price action on 1 minute chart. You're looking at the price action of a 15-minute candle is what you're looking at. Here's the open. This red bar is where it opened, and here's where it's going to close. So right now, if you're looking at the previous 15-minute candle, I like doing this on the 1 minute chart, especially when things are just kind of going sideways a little bit. I like to look and see what the price action is between 15-minute time frames. So here's 8:29. So this red candle here is the open of the 15-minute. This is where the pullback was. It didn't make a new low high before this one. So right now this was the pullback. And now it's looking like it wants to head on down.
Gotta love when your phone dies and you're in a trade. I think I need to change the battery. It keeps on messing up.
I'm going to see if whatever that was annoying with speaking to my phone, let me turn it back on again and see if whatever was annoying goes away. I think it was hacked. I really think my phone was hacked. I just started playing music that I didn't understand, didn't want to have it on there, and couldn't get it
Well,
off.
that's special. I think it just thought you needed some music.
Yeah, it's almost like when we got hacked a few months ago in our trade room.
Yeah, that was special.
See, on the 5 minutes, still respected our 13 period moving average. Our 5 came up, hooked down, now it's hooked again. We're coming up on, we're 5 minutes away from the 9 o'clock close. I like to see a close below this low here. So that means we're getting lower highs and lower lows. And we have about 2 more minutes before this 15-minute candle closes. Move it over here. Let me take some of these lines off. Unsync that. I'm going to unsync this. Unsync this one. And I'm going to take these off. This candle here, this blue candle here respected this red move down. We got a little bit of a close above that wick, but not by much. So right now it's trading inside a from 66 to 58, so it's basically a 12 pip range in here.
Yeah, you got a little wedge.
Yep.
See how common wedges are, right? They're all over the place, all the time, no matter what.
We still have our target down here at 50, 55, 67, 55. That's our 7 pips from our entry.
Question.
Yeah.
Initially, this was an ascending wedge. When you drew your subsequent smaller wedge, it was also ascending. Is there any pattern to that? Or no, it's just coincidental?
It's probably more coincidental. When I drew the secondary wedge, I'm just looking at, I'm not looking whether it's simply ascending or descending. I'm just drawing the triangles, basically, when the secondary. When I draw the first one, I usually try and do it with what the alert was referring to. But I'm just basically looking for a long move down, a pullback, and then looking for where there's a little bit of a area where it's just sort of consolidating and looking for where the break's going to be.
Okay.
Yeah.
Thank you.
Yep. If I don't just take that, because this is really where, when we drew that initial wedge from the very beginning off the alert, here was the alert, and I just wanted, we had this move up. Here's where, this is actually the area where the you could have looked at the wedge, but since by the time we got to this thing, it had already passed this point. I just flatlined it across. We
Right.
already had the break. All right, but the thing is, what I'm looking at is it broke the 62 on here, and that's a good sign that this is going to go short. And you can see right now where we're getting this crossover of the 1362 on the 15-minute chart. That's pretty significant. And but as this broke and this broke, we're having to look and see where our other target zones going to be. And so I'm looking at this pivot. That's where I came up with this strong move up, came back down, retested it, and that's why I put this part of the wedge all the way down here. And then I brought this down because I know that the price was already at this point. So I know that it needs to break through. And the other way I could do it this way. Let me do another way here, which may be a little bit less confusing. We had the break. And so right now, this area right here, we're looking at somewhat of a demand zone.
Right.
This is the origin of the move. Right here is the origin of this on this daily from yesterday's close, which is like this is yesterday's close. Yeah, this was yesterday's close, the opening. So this is the low of the whole session today, from yesterday at 5 o'clock when it opened it back up again till now. It opened up, came down, and then started taking off. So it's going to be looking to come back down to this region. And this is really kind of our demand zone, which is why we have our target here. So this is the origin of the move for the day. Now, if this gets broken, there's our demand zone here. So there's our demand zone. If this gets broken, we can come back to yesterday's range, and you can see how this was the day before. This would be Thursday's. This would be Thursday's low. That's the origin of the move. Straight up, came back down, tested this range, and then came back up. You see how it tested the 62 right here, and it has followed the 62 all the way up until just now where it broke. This thing has the potential coming all the way back down to retest this area down in here where the 62 was crossed. So let me mark that area. Here's the body of the wick. Here's the wick. Here's where the buyers came in. And this is, and you can actually take it all the way down to here. And this is the top of this demand zone. I kind of like just taking this with just for daily ranges. I can see this is where so nothing's been from here. Nothing has been, this area has not been touched since yesterday morning at 9 o'clock. And that's why, and with the strength of the dollar to the downside, if this thing breaks, it's probably going to come on down. Now, it may not make it down here today, but that's where the potential is if it gets a strong move to the down. If it can get some strong sellers in here, it may take it on down into here. Or then if this breaks, it's coming down to this one. It won't be a straight shot because you have all this area in here, but that would be a target. Actually, this might be a little better target right in this area. Initially. But I did like the idea. I do like this move up. This is where the origin of this whole move came from. I said this was today's open high. Now the thing is going to come back down and retest this or not. And that's one reason why I kind of liked having this little, bring this over here from the bigger standpoint, is that we don't know where this low is going to end up being because we don't really have we have our anchor from the day's open. We have our anchor, we have our high. Now we're just trying to find out where's the low going to be? Is it going to be here or is it going to come back down and retest this area? And right now, that's where it's kind of fighting right now, trying to decide if it's going to break this. If we just flatline this over here, this is still the wedge, it's still inside this movement here. This was the secondary wedge at the top of the move, and we may get a secondary wedge at the bottom to come up and retest this one. That's why I do like this area here for if it retraces. This is area it was basing, it dropped down. It could retest this area before it drops down again. But the fact we got the 13 to cross over the 62, that's a good sign. Come back over to our 5-minute chart. And we wait. And what's interesting right now is normally you'll see this one being above this one. Once this one crosses, we'll probably be more out of harm's way.
Let's maybe that side.
Any other questions from anybody? This one's a slow mover. And most of the people in New Zealand are probably wrapping it up for the weekend.
Yes, they are.
Right now it's 9 o'clock at night over there.
Hi, can I ask something?
Absolutely.
Can you repeat that you said about the quarters, that banks like the quarters above?
The quarter theory you're talking about?
Yes,
Uh-huh. What about it?
I didn't understand it. Can you repeat?
Oh yeah. Basically, if where the big banks, oftentimes what they do, if you look at okay, no, show this one here. They look at like when the prices are like $1, $1.25, $1.50, $1.75 to say $2, say between that zero and $1, because most of the pairs that they're trading in like $1 point something something, and that point like from $1 to between $0 and $1, or $0 to $1 to $2. In between each one of those dollar ranges, you have 25 cents, 50 cents, 75 cents, and then the next dollar. Those 25-cent areas are where the big banks oftentimes will trade. So let's just say, for example, let me see if I can find this. Let me get
That means we find consolidation.
So basically, like for like the U.S. dollar, Euro U.S. yen, or Euro U.S. dollar. It's as $1.25 to a euro. That 25-cent mark is a major point where the big banks would be trading, and they would trade. And if you take the 25 cent and you go 5 cents above, which would be 30 cents, or 5 cents below, which would be 20 cents, that 10-cent range, oftentimes you'll see a lot of basing going on, and then it breaks out of that range. The Fibonacci tool that we have is a lot the same type of thing, only it's using more of an algorithm to find those points. And that's one reason why this thing is so helpful, is that it tells you these are price points that banks will be looking at. And you can see like this right here is at 67.75. The 75 is significant, and they go 5 points above, 5 pips below will be a range. Or you look at down here at the next green line is right at 67.54. Well, that 54 is a key factor, and that's just a little bit on either side of a 50 to 45 range. So, and that's really where these Fibonacci indicate. These are price points. They're not anything to do with price action. They're strictly price points on a scale of 0 to 1, or a $1 range, and it just finds those price points that are significant within those ranges.
How can we use it for our benefit?
You use it because when you can get the tool here, especially when you get the tool, you'll see that the price will bounce off of a lot of these areas.
Hmm.
Like it'll come down, for example, like if you look here at the supply zone right here, this red line, let me draw it out here so you can see a little bit better. This red line right here, this was a, so I'm on a 5-minute chart, so there should be a 5-minute, get my, this is a price point right here. So this is only 5-minute chart. So I'm going to 5-minute was red. Try this one here. This, you can see where the price came down, it bounced, and it just sort of hovered right around here, and then it dropped, came back up. This blue candle came up, retested it, came down, and now we're looking for it to retest this area down here, which is where the green one is. And it goes from blue to green to red, and then back up to blue. And you'll see a lot of times it'll bounce. You can see right here, it bounced right up here by the blue area. And usually it goes from blue to blue with stops in between. And that's how you, when you get this, you'll see that we use a lot of these areas as targets because they're significant price points.
We
Okay?
don't have to be scared. It's just base range.
And the reason why we use the 7-pip stop a lot of times is because if you look in, let me just put it here. We have the red one up here. We have a green one. Let me put a green one here, and I'll show you what I'm talking about. Here's where the green one, we're going to say this is a green 5-minute, I believe it was. 5-minute green. Okay, so right there. Let me just move this out of the way a little bit. So you see where the red one is and the green one is. And in between, so I'm just going to close all this. So I'm just going to put this above here. Get this below here, so just get these out of the way. This thing's not moving that fast. I can put them back again.
Okay, well, I can see it.
You can see it. You can see it. So, so if you see where the, let me see. Where's my green? Where's my? I lost my. Oh, I know. I took it off. That's why.
Yeah.
I didn't mean to do
The red
that.
is right there.
The red is right here. So this is our red 5. Chrissy and I just went over this just yesterday afternoon, as a matter of fact.
Yeah. And there's your green.
And here's a green 5. Now these are calculated algorithmic type price points. Now if you see where the red and the green, now if I go and put this on our 2-minute time frame, you're going to see that the 2-minute, here where the red is, you'll see that's where the 2-minute blue is. And right now you have, and you'll see between here and here, so now we have a blue, red, green, back to blue. This is, the 5-minute green is the same as the 2-minute blue. But you'll see, if you're going to look and see that between each one of these lines here is 7 pips. Between here and here is roughly 7 pips. And that's one reason why we use 7 pips. Once in between these ranges, like right now it's in between this 2-minute zone and this 2-minute zone. So if I go and so right now we're right in the middle. So let me draw the zones here from up here. This is the upper third. And actually it breaks these things down into thirds. Here's the bottom third. And so right now it's in the middle between these two. So this, we can call this our supply. Here's our demand. But you see right now it's right, and it's just sitting right here in the middle between these two areas. Once it breaks through here, it's going to come down, and then it's going to be retesting this area over here, which is the next 7-pip range. So so that would be support or resistance, and if it can come down, and so right now we're kind of in limbo right now. We're in between this 7-pip range. If it can break through the top, if it can break through this one, it's probably going to go up to here. If it can break through this middle area, it's going to come down somewhere into here. But right now it came down into this zone, Didn't go, it went about halfway, not quite halfway. Now there's a good chance it's going to go halfway up into this one.
It bounces there.
It just bounces, and you'll see, like over here, you can see over in this area, you can see where the price hung out in this area, came down and hanging out in this one. Now the question is, can it come back down and fill this before it goes back up again? So right now, we're right in the middle of this zone. And that's how we use those price points. So that you can use them for targets, you can, especially when they overlay with like a moving average or a price action. It's a good way to use them for a target. Or if it comes down, like I said, this thing came down, our RSIs were down low, now it's starting to come back up, retest this area. It's probably going to retest the area where I would expect, I wouldn't be surprised to see it come up and retest this area right here. And then it would probably fall back down again. But you see, there's a lot of there's a lot of price is very narrow range in the 7 pip. Now it's coming up to see if it's going to have any buddies to come up and bring it back down, or if it's going to break through to go up to the top part. My suspicion is it's going to come in right about. You see where this candle came in right in the middle of this zone.
Yeah.
If I put a line across in this candle, where this candle opened, this is where this move started. You can see it's right about in the middle of this 7 pip range.
Mm,
Okay, and that's how we use this.
thank you.
Uh-huh.
Thank you very much.
You're welcome. You can even see where it came right down, not quite into the middle of this zone right here. So it's really expanding its range a little bit now. And this is where we can be looking at the wedge, where we come up to, it came into this zone, came up and tested the top of this this range. So I'll just take it right from here, came down here. Now it's pulling back. And we'll see how far it goes. If it goes up to this area, that would give us a lower high, a higher low. So right now it's forming a wedge. Now we don't know where this thing's going to end up. I'm just projecting it's going to come up somewhere up into this area. And we'll see. And if it can form a lower high, if it doesn't break this A, we should still be okay. If it breaks the A, then it's probably going to be going on the other direction. It is starting to lose a little bit of strength. You see a little bit had a flip now with the New Zealand, had a flip right there. This one's still strong though. We have a 5-minute flip, but it's coming up back into the supply zone. We'll just see how it plays out. Oops. We still have this 62 right here. Let me go see if I can see this a little bit better. If I pull this background off, there we go. See, we're right at where the 62 on the 5-minute chart is. Let's move this over and see if it comes up to that red line. So right now we don't know where it's going to go, but right now I'm suspecting it's going to be somewhere in this area. Here's coming up. We'll probably get a little bit of a hook. But here you see you have pretty much a straight shot down. Now it's coming back. It took out this little area, but now let's see if it's going to make a lower high to this area. These are just projections. These are just knowing how price action moves. It gives us a pretty good idea of what to expect. It doesn't always play out, but if this is going to be a down move, it would not surprise me to see it come back and retest this zone halfway through. If it can break out the top, then we're probably going to be going up to this one.
This is a normal FIBO or is it yours?
This is ours. This is an algorithm that one of our developers developed, and we put it to the program in TradingView program, and that's one of these indicators that we're working to make available. And so we're just having to jump through some technical hoops to be able to make that happen, but we're working on it.
This RSI that you use, what's the point when the red one crosses the blue?
Yeah, these are two different RSI levels. This is a 3-period. The blue one's a 3-period RSI, and the orange one is an 8-period. And basically, that just shows the blue one's going to react faster than the orange one. And usually when you get them both going in the same direction, that's the direction that the price is going. When you get the hook above here at the 89 level, or a hook at the 11, you have a 11, this is a 40, this is a 60% of the zone, and this is 89. When this thing gets all the way up here to the 89 and you get a hook, that's generally going to be the end of the move, and that's where you would want to be getting in, because this thing moves from the up, down, and it cycles amongst the 8. So you want to see a crossover, and that's usually it goes up higher. When it comes back, crosses back over, it goes back down lower. And you want to see the price action to follow that. And you want to see, like, when this thing comes up and it hooks, it should be at a point where it makes sense where it's going to hook. Oftentimes it's going to be at the beginning of where the move came from. It's going to hook. So this is where this move originated. Let me just draw this out here a little bit. This is just a little bit tighter zone. You see where this is the origin. This is where the wicks are.
Yeah.
And it's going to come up and where these wicks are is where the sellers came in. The sellers took over up here, drove it down, and then down here is where the buyers came back in to drive it back up again. So this little area right here is where I'm looking for to see the sellers. This area, and so we have this one. Let me take the
To retest.
and it'll be a retest. So, and here's the wicks on this. So right now it's sort of trading between this range and this one right here. Here's where the wicks are. Now this is on a, what time frame are we on here? We're on a 5-minute chart. See how the price came up into this level? It came up into it just came up, here's the bottom, here's where the red line is right here. It came right up into that, it passed it, now it's checking. Now if this thing goes sideways and comes back up, it passed it, now it's checking to see if it's going to hold. If it comes way back down, it's not holding. This is just a test. So right now, if I pull this wedge over here, here's our high, here's our low. Right now, if that candle holds, it's a lower high. Now that's a anchor. Here's a hit. I like to see a third hit before this thing's validated. Now, if it breaks through, then I can still move this thing all the way up until it gets leveled up. But right now it's making a lower high than where the A is. It's making a lower. It's getting up into this area and it started finding some sellers right up in this area. So this area is starting to be rejected a little bit. And again, it's right here at this price point. Now you see if this is at 67, 68, 68, 60, 68, so 5 pips on either side, that would be to 73, which would be right about, right about in here. And actually on this part, it could probably even make it a little bit tighter than that. You see right now, it hit this red line and it's really just pretty much has the spread. 2 pips above, 2 pips below. Now the fact this thing's basing, I could see we're coming on up and retest this. Let's see where our 62 moving average is on our 15-minute chart. And that's going to be, let me take this off here and take this all off over here. I'm going to slide this over and make this our 1562. And we should get a little bit of, we should have a hard time getting past this point. We have the crossover right now. That's a good sign. You can see how this area is being rejected. Starting to get the moving averages on the 1 minute kind of crossed over, but now it's starting to retest this area right in here. In about another 3 minutes, we should have some answer. The US market's going to open up in another 3 minutes. And I can take my other 15-minute, and we're going to see right here is where it's going to open up at 9:30. See it's starting to come back down. It's getting ready for the market to close or to open. This would be the 9:15 candle right in here. This would be the 9 o'clock candle. So from 9 o'clock it came up. Last half hour it worked its way up, and now look, as the market's opening. This was all the pre-market move right here. Now the market's going to start to open up here at 9:30. We're going to see if this thing will just drop off. If it doesn't, we may want to be getting out of this trade. Came up, it couldn't break through this box up here so far. Right now this thing's still holding, pretty much right where we said it was going to hold. If I look and see where my 5-minute 62 is, I'll come over here. And that's going to be at 67.74. So that's right, just a little bit of right inside that box there. This thing's just now coming down. So from the secondary wedge that we have here, we can move this into here. Here's our high. Well, actually, we use this as the top. This is where this move started. Right off of that candle right there. That's the top of the box. And we have our high, our low, our lower high right now. This D's at our higher low. Now we're going to see if this thing's going to break, if it's going to break this D area. This is our demand zone that we were looking at. So this box held. Right now we're back into the middle between the top 7 pips and the bottom 7 pips. So here's 7, 14, 21 pips. So this is a 21 pip range. Right now it's in the very middle of it. And we're just looking for it to come down and retest the bottom of it. And it may just retest midway through and just keep on cycling back and forth for a while. We don't know what's going to happen here. So this is where the patience comes in.
Can I ask something?
Okay.
This hockey strategy is more faster than the fusion strategy because I think you wait for 2 15 candles to form.
Yeah, this one is this is very different than the fusion strategy, and the two totally different strategies. They both trade wedges, but Susan does hers a little different way than what we do ours here. I'm not saying one's better than the other. It's just this is what works for me, and so this is how we teach it in here. But they're two different strategies. So I would not try to. I would say pick one and go with that. Basically, in this room, you're going to see where we're going to be teaching a lot of technical analysis and price action analysis, whereas Susan's is a little bit different. And like I said, I'm not saying one's better than the other. We use very, very tight stops and go for, so we can take larger lot sizes. And so we can make as much money with a 7 pip stop as a lot of people do with a 50 or 60 pip stop. And we can just do it because we take a larger lot size because we have very, very tight entries. And that's part of our philosophy and our strategy is to be able to take a larger position and have a tighter stop as opposed to a smaller position with a bigger stop.
Yeah, we don't need to sit in a trade too long. We just need small position, small take profits, small, and we'll make significant amount of money. Now on the other side, yes, you can take the fusion and put it. You can take the. Sorry, the little guys are up, but you can take the our strategy and do it on a 5-minute or a 10-minute if you're more comfortable with that, right?
Yeah, here's our little calculator that we have here. I'll show you how this works.
Yeah, that'd be good.
Like we're in the New Zealand US dollar trade. And right now a pip value with a full lot size, the pip value is $10. So if we have a 7 pip stop is what we oftentimes use, and let's say we have we have a $500 account, and we want to risk 2% of our $500, our risk is going to be a $10 risk. If we have a 7 pip stop, we can take a lot size of 0.14 lot size. If we say, well, we want to still only risk 2% of our $500 account, no matter 2% is always going to be $10. But watch to see what happens when I change the pip risk size. If I go to say from 7 to say 7D, you have the same risk factor, you still have the same dollar, but now your lot size drops down to a 0.01. So what we're saying is that we can have a 7 pip risk, and we can risk still the same 2%, but we can take a larger lot size. And our philosophy is that there's a whole lot more 7 pip moves in the course of a day than there is 7D pip moves in the day. So all we have to do is get the right wedge, get the real tight stop, and we're still risking the same amount, but we get our 7 pips, we can make the same amount of reward. $10. I mean, if we have 7 pip risk, 7 pip stop, we'll still make the same $10 with the same lot size. And that's part of our strategy that we use. That makes sense?
I'm saying that because I think, in the fusion strategy, you wait and wait the first 15 candles to go under the line of the wedge, the bottom line of the wedge, I think.
Yeah.
And then get in.
Yeah.
Maybe
Yeah, well,
in the first 15 candles, there will be 7 pips down,
exactly.
and you have your money in your pocket. That's why.
Yeah,
Right.
absolutely.
Yeah. See, we usually have our money in the pocket before they ever even get into the trade after the alert.
Yes.
Yeah, so it's a little bit more work. I'll say it that way because you're not entering on a 15-minute candle. 15-minute candle can go anywhere from 7 to 12 pips in length. If you already enter the move on there, you better hope that it doesn't come against you right away.
Yeah.
But
I
you
think-
enter when I didn't see when you enter exactly, but I think right away.
It was over. Well, it was somewhere. I think. Let's see where we get the alert. The alert was at 7:30, I think. What time was the alert?
7:30.
Yeah, 7:30. So, I mean, we've been in this trade a lot longer than we normally are. Usually we're in the trade within about 30 minutes we're out of the trade. But at 7:30 is where we entered this trade, which was, oh gosh, it was clear all over.
Yes.
It pretty, see, 7:30 was
Somewhere
right,
about there.
yeah, right about in here. So here's where the alert was at 7:30. Let me go right here. That was the alert. And I'd usually make my alerts yellow where the alert was. Just so you know, there's a color coding involved with how I do. So
Okay,
everything's
don't bother.
yeah.
Okay.
But here's where the alert was, and here's where we drew the wedge off the alert, which was roughly from.
It's okay. Don't
No,
draw anything.
no, we're okay. And then here's where the alert was. Here's where the break was. Here's where we missed it. We didn't get in that
I'm
early.
saying because the first you have the first candle, the first 15 candle, and then maybe it comes up again.
Yeah.
You have your money in your pocket, and the future strategy you wait.
Yeah.
For the
and
next.
and that's where the difference is.
It has you have to have the right indicators. I think technology.
So I think the fusion strategy probably would have gotten you in long here to going up. So
I like technology.
yeah, well, you're in the right place. If you like the price action, and you like
the banks.
this is
technology. Why are you not us?
Yeah. So anyway, this is how we do it. And I said we don't always win every trade, but we use very tight stops. And then we also know when we can know if we revert. There's times when we will go and we'll reverse it. Then when we find out that if it breaks our stop, we look and see, well, now it's time maybe to go in the other direction. And this is maybe starting to get to be that point. But we have a high, a low, lower high, still have a higher low. So this one's starting to give us a little bit of a problem here. Being a Friday, I'm not going to hang into this thing too long, but here's an anchor, here's a hit, still a higher low, higher low, higher low. Now, if it breaks through the top of this, we may want to be out of this trade, or at least rethink our position, because it should still, this trend line should stay respected, and it should be a lower high. And as it gets tighter and tighter, eventually it's going to break out of one way or the other. And usually after about the third challenge of a trend line, it usually goes and breaks out. So here's the first challenge, here's the second challenge, here's the third challenge. Now it's coming up to the bottom of this red zone that we're talking about. Came up partway. So this one's just taking a little bit more time.
Patience.
Patience.
Have patience.
Yep.
Thank you.
Yep. You're welcome.
I'll go mute myself.
And actually right now it's 9:30, so we're just about, the market is just now opening up. Well, opened up about 10 minutes ago, and we're going to see what it does here. And then we're going to be closing the room down and taking the weekend and enjoy ourselves. But I do like to thank everybody for coming in this week, and we'll be back Monday at 8 o'clock. And watch this trade. You'll see, I mean, right now it came out, it tagged this. So right now it made a lower high so far. And it won't make a lower, right now it's still hanging inside this little wedge area. But once it breaks, it should be able to get down into our other area.
Can
right
I
now
ask
it's still
something?
trading in the 7 pip zone. Yes.
Are there some pairs that you prefer because they behave good?
Yeah, there are certain pairs behave certain ways, and but the strategy works on pretty much all the pairs. There might be some little variations, but this all now the U.S. yen. These numbers will be different on the U.S. yen because of the pricing of the yen to the dollar. But for all the other U.S. pairs besides the yen, these numbers that we told you are all pretty valid because we're all trading within about a $1 range, $0 to $1 range, or $2 range to the U.S. dollar. And most of the alerts that we get here are going to be all U.S. dollar based, except for the gold, and then we'll get alerts on the gold. But other than that, everything else is pretty much the same. So with
Even
that,
in British pound, even.
British pound, yeah, the value of the British pound is a little bit more than $10 a pip on a full contract. It goes up to, British pound is I think 10.28. I think is so. British US is, no, it's still $10. So
I mean,
anyway,
you trade that. It's the same strategy. Go well.
Well, the strategy works pretty well on all the pairs that these IRIS alerts are, and in other pairs too, other combinations. It still works pretty well, but
Yeah, just stay away from gold.
yeah, stay away from gold.
It moves
Yes,
too
I
fast.
know.
You can't use a 7-pip stop loss.
I know.
Yeah. So
Thank
anyway,
you.
we're going to shut this thing down. So we got to leave room for the next
thumbs
person.
up.
There's another group coming in. So thanks everybody
Appreciate
for coming
you
in,
guys.
Thank you.
and we
Bye
will
bye.
see
Have
everybody
a
on
nice
Monday.
weekend.
Thanks, everyone. Have
Yep,
a good
Have a
weekend.
great
good
weekend.
weekend.
Enjoy it with your family and everything.
You too. Thank you.